Ever feel like you need to get a quick handle on a pharma company, its performance, its future, but you're just buried under analyst reports? It feels like a huge task.
Oh, absolutely. I mean, those reports are packed with info,
Right.
but finding the core message, that takes real time and effort.
Well, that's exactly what we do here on the deep dive. We dig through all that dense research for you, pull out the key stuff.
And today, yeah, we're looking at JB Chemicals and Pharmaceuticals, or JBCP. We've got two recent reports here, one from Centrum Broking, one from Dolat Capital. We'll break down what they're saying about recent performance and the outlook.
So think of this as your shortcut to understanding JBCP, where they stand now, where they might be heading, without getting lost in all the numbers. Okay, so let's start with how they did recently. Q4 of their last financial year, FY25.
Right. Looking at both Centrum and Dolat, the the general feeling is JBCP performed pretty much as expected. Their total revenue landed at Rs 9.5 billion,
Okay.
which is yeah, a decent 10% jump compared to the same time last year.
And their business inside India, the domestic formulations, that seems important. It grew 12%, right, if
Yeah,
you leave out the eye care part.
exactly. 12% year-on-year growth there. And that's definitely better than the overall Indian pharmaceutical market, the IPM, which grew around 7%.
So they're outpacing the market. What exactly are domestic formulations?
Good question. Basically, the medicines they make and sell within India itself.
Right.
And yeah, both reports really highlighted this domestic strength that came from, medicines for chronic conditions, think long-term stuff like heart disease, and also acute things like infections.
Right.
And what's really standing out is how well their big brands are doing. Like Asmarta, that one jumped 30% in sales compared to last year.
Wow, 30%. That's huge for a single brand. Any idea why such a big leap?
Well, a 30% growth spurt like Asmarta's, it often points to a few things happening at once. Could be more doctors prescribing it, maybe patients are having good results, or they might have found new ways to reach patients who need it for heart failure. It signals a really successful strategy for a key product.
Makes sense. Okay, what about outside India? International business.
International also showed positive signs, grew 8% year over year overall. Now, within that, their CDMO part, that's contract development and manufacturing, did exceptionally well,
Okay,
up 18%. That's where they make drugs for other pharma companies.
got it.
Their international formulations, so selling their own branded meds abroad, that grew 6%, saw good results in Russia and their branded generics exports. The only bit that dipped was API, active pharmaceutical ingredients.
Ah, the raw ingredient.
Exactly. That was down about 10% year over year.
So growth in most areas, but a dip in the basic ingredients. Interesting mix. How did this all add up profit-wise?
Profitability looked pretty good. EBITDA, that's earnings before interest, taxes, depreciation, amortization, was up 14% to Rs 2.3 billion.
Okay.
And importantly, the EBITDA margin, basically how much profit they squeeze from each rupee of revenue, it expanded,
Yeah.
reached 23.8%. If you take out the employee stock option costs, it was even better, 25.3%. Dolat Capital actually called this out as being right in line with their forecasts. Net profit after tax also climbed, up 15% to Rs 1.5 billion.
Okay, so a solid quarter, met expectations. Let's pivot to the future then. What are the analysts forecasting, and what's the company itself saying?
Yeah, this is where it gets quite interesting. JDCP's management, they've actually bumped up their forecast for the EBITDA margin for this year, FY26.
Oh, really?
Yeah, they're guiding for 27% to 29%, and that's excluding those ESOP costs. So it suggests quite a bit of optimism internally about profitability.
That sounds promising.
They also think their gross margin revenue, minus the direct cost of making the goods, will get better too, by about 30 to 50 basis points compared to last year.
Basis points, that's hundredths of a percent, right?
Correct, 1/100%. And they expect this improvement because they'll be selling a better mix of higher profit products and also from keeping costs in check.
Good news for the bottom line then. Where do they see the revenue coming from going forward?
Well, management expects that the domestic formulations, plus that CDMO business we mentioned, will make up a bigger slice of the pie. Around 75% to 80% of revenue over the medium term. That's up from 69% last year.
Okay, a shift in focus.
And both Centrum and Dolat have their own numbers on how these bits will grow. Centrum, for instance, sees domestic formulations, again, ex-ophthalmology, growing at a 12% average annual rate between FY25 and FY27. And they see CDMO growing at 13% annually, on average in that same period. They think things like ORS, throat strips, iodine products for the US-EU will drive that CDMO growth.
And Dolat Capital, are they seeing similar growth trends?
Also optimistic, yes. Dolat projects a 14% average annual growth for domestic revenue and 11% for the international side between FY25 and FY27. They also flagged JBCP's own target for CDMO to hit Rs. 8 billion in revenue in the next 3 to 5 years. That's quite ambitious.
8 billion, wow.
Yeah. And for this current year, FY26, Dolat specifically expects CDMO sales to grow maybe 12% to 14%.
So growth expected pretty much across the board. What about specifics, like their international branded drugs or the eye care business?
Dolat sees the international formulations growing 10% this year, FY26, and then picking up speed to over 12% in FY27. And that ophthalmology business, the eye care stuff, it's currently run a bit separately, but the plan is to fully integrate it into JBCP from FY28.
Ah.
And that integration is expected to, boost overall profitability down the line.
Right, bringing it all under one roof. That sounds like another potential plus. So pulling it all together, what are the overall forecasts for their financials in the next few years?
Centrum's overall numbers suggest average annual growth of about 12% for revenue, 17% for EBITDA, and a strong 20% for earnings per share, looking out to FY27.
Which is 20% EPS growth, okay.
Yeah, and they see that EBITDA margin hitting a pretty healthy 28.6% by FY27. Dolat Capital, as I mentioned, they did trim their earnings per share estimates just a bit for FY26 and 27.
Why was that?
They assumed slightly lower income from other sources, not core operations.
Yeah.
But importantly, they still kept their BUI rating on the stock.
Okay, so generally positive vibes, just some minor tweaks on earnings. Let's dig into why they expect this growth. What are the key drivers the reports are pointing to?
Right, so in the domestic market, a big factor is the expectation JBCP will keep growing faster than the overall Indian market. Management's actually targeting 2 to 3 percentage points faster each year. Both reports also talk about a big improvement in something called per consultant per month productivity. Basically, the sales each medical rep generates from doctor visits has gone up a lot, and they expect that to continue.
More efficient sales force.
Seems like it. And we're seeing really strong growth from their big brands year over year. Rizel for cholesterol was up 19%. Silicar for hypertension up 23%. Those are big numbers based on recent IQVIA data.
Those are established drugs still growing fast. Impressive. What about the CDMO side? What's fueling that growth?
The CDMO business seems to have really strong momentum, good demand for their services, and they've got a healthy pipeline of new projects lined up. JBCP actually expects to hit a quarterly revenue run rate of about Rs. 1.5 billion for CDMO this fiscal year.
Okay.
Plus, they see chances to launch some of their own manufactured products internationally, which would add another layer of growth.
And their own branded generics internationally. How's that looking?
That part operates in 4 main areas: Sub-Saharan Africa, Latin America, Southeast Asia, and the Middle East. About half the sales there come from government tenders, contracts.
Right.
And JBCP's been busy filing for approvals for new products, things like gliptins for diabetes, heart failure meds, eye drops. They hope to start launching those early in FY27. Oh, and they've also been restructuring their South Africa business, which should help profitability there.
We talked about Asmarta earlier, that heart failure drug. Sounds like a star performer.
Absolutely. Like we said, 30% growth year on year, which is much faster than the market for similar drugs, which grew about 20%. JBCP is aiming for Asmarta to become a Rs. 1 billion franchise within 2 years.
₹1 billion from one drug franchise.
Yeah, driven by mid-teens volume growth. And they're planning to ramp up production to meet that demand.
And the eye care portfolio, even before full integration, it's doing well.
Seems so. It grew 11%, which again is way ahead of the industry's 4.5% growth. Dolat thinks sales there could reach Rs. 2.3 billion by FY27. And management plans to add more products, more SKUs to that lineup too.
And it's not just the big blockbusters, even smaller brands are making waves.
That's right. Sporlac, a probiotic, it actually broke into the top 300 brands in the Indian market. It's now a Rs. 1.34 billion franchise. So it shows growth isn't just concentrated in a few areas.
Okay, so lots of growth levers. What does all this mean for their financial health overall, and how are analysts valuing the stock based on this?
Well, as we covered, management's upped the EBITDA margin guidance, and they see gross margin improving this year too. Yeah. Investment-wise, they plan about Rs. 1 billion in capital spending in FY26.
CapEx, okay.
Yeah, mostly maintaining current facilities, but some for growth projects. Those ESOP costs, they expect around Rs. 460 million this year, dropping to Rs. 260 million in FY27. And they plan to stick to their dividend policy, paying out about 35% of profits.
Consistent dividends. And the analyst ratings and price targets.
Both Centrum and Dolat have BUI ratings. Centrum's target price is Rs. 25 times their estimated FY27 earnings per share.
Okay, 35 times.
Dolat's target is slightly lower, Rs. 2,081. That's based on 32 times their adjusted FY27 PE ratio, price to earnings, taking into account ESOPs and amortization.
So both analysts see upside, using slightly different valuation multiples. Did the reports compare JBCP to its peers?
Yes, Centrum did. They put JBCP alongside big names like Sun Pharma, Cipla, Dr. Reddy's, Torrent Pharma, looked at things like growth rates revenue, EBITDA, EPS, and valuation metrics like PE, EBITDA, and also return on equity.
Which is useful context.
Exactly. It helps you see how JBCP stacks up against competitors in terms of growth expectations and how the market is valuing them relative to others. EV is enterprise value, by the way, another way to look at total company value.
Right, good point. Finally, any specific little details or potential risks highlighted in the reports that are worth keeping in mind?
Yeah, a few things. The API business, the ingredient side, is now mostly focused on supplying their own needs and improving margins there, not really large external sales. Also, they're deliberately not focusing on trade generics. That's the really low price, high competition end of the market.
Strategic choices.
Seems so. Also worth noting, their old brand Rantac isn't banned, despite past issues, but quality is obviously still watched closely. On the plus side, about three-quarters of their domestic products are growing faster than the overall Indian market.
Significant.
It is. And risks. Dolat pointed out two main ones: potential government price controls on drugs, which could hit revenues, and the risk of higher input costs, raw materials getting more expensive, which could squeeze margins.
Definitely things to watch.
Yeah.
Okay, so let's wrap this up. What are the main takeaways from this deep dive into JB Chemicals and Pharmaceuticals?
I think the big picture is one of pretty robust, consistent growth, especially strong in their home market, domestic formulations, and also in that contract manufacturing, the CDMO segment. Recent results were solid, pretty much met expectations,
Right.
and the outlook seems quite positive, backed up by management's own raised guidance and the optimistic forecasts from both Centrum and Dolat.
Exactly. So hopefully this gives you a much clearer, more manageable view of JBCP's performance and potential without needing to wade through those really detailed analyst reports yourself.
And maybe it leaves you with a question to ponder. With chronic diseases becoming more common and this whole contract manufacturing space growing, how well positioned do you think JBCP really is to capture those long-term trends? What else might you want to look into to understand their specific advantages there?